The bank is bamboozling you into being proud of your interest rate while insidiously confusing you about how much total cost of interest you're spending. And that's what debt weapons can help prevent. If you could get back 80% of the total interest cost that you will pay from today forward, you have a lot more opportunity. Today, I just have to emphasize the 7 main reasons that we're focusing on getting access to debt weapons. I continuously get the same questions asked. Why are we getting debt weapons? What purpose will they serve? I'm going to share with you the 7 main benefits that these tools bring to us as investors and as entrepreneurs. Now, whether you're a business owner, an entrepreneur, or a homeowner that just wants to own your own primary residence free and clear, this video is for you. So make sure you stick around. Hey everybody, Matthew Pillmore here, president of VIP Financial Education. And as you know by now, or hopefully you do, I help you go further, faster financially. So thanks so much for tuning into our channel. If you haven't yet done so, I encourage you to consider subscribing. Make sure you check out all the videos. And don't forget to turn on the little bell. You're going to click that bell in order to get notifications so that every time I update new videos, which happens every week, you're alerted and you're staying on top of changing trends in the marketplace. The banks are always changing their rules. So you've got to make sure that you stay tuned and you're consistently educating yourselves like we are. So we're going to dig up the best information for you and then we're going to pass it along. Now today I want to talk about the 7 main steps or the 7 main benefits of actually going out and acquiring these debt weapon accounts that we talk about in all of our trainings. If you haven't heard the term yet, debt weapons are both personal and business accounts that can help your money go to work for you. Now, when I say go to work, what I want to do is start to break that into these 7 bullet points today. The very first thing that debt weapons are going to help you accomplish is a maximization of cash flow. And all you have to do is check out our 100% debt-free for life training in order to see firsthand exactly how powerful that is and exactly what type of financial benefits you can see when you're manipulating the way that your debts are being serviced by using these alternative and improved accounts. If you just simply upgraded, let's say your motor vehicle, let's say you went out and you drove a Ferrari instead of your Honda Accord, I'm sure you would see some substantial differences between those 2 vehicles. And what we're doing is we're upgrading vehicles for people and replacing accounts that are underperforming with accounts that help perform in a much better way. If you just simply do what the banks hope you do, you're going to fall into a trap that's extremely expensive for you. The first and most important net result of utilizing debt weapons correctly is that you'll have more money left over at the end of each month. Cash flow is defined as the difference between what we earn and what we spend. So if we are earning more and we're spending less, we're going to have more money left over. Some people call this disposable income. Other people call this discretionary income. I don't care what you call it. We call it cash flow because cash flow is king. So that's why that number 1 benefit is so heavily emphasized. The second benefit is that we compress amortization schedules. So accounts that are known as installment have a beginning, a middle, and an end, like an automobile, right? We have a start date and we have an end date. A mortgage is an installment account as well. A student loan is an installment account. Installment accounts cost a fortune because of the way that amortization schedules are designed. And if you'll look at your monthly statements on your mortgage, for example, and see just how much is being applied toward interest versus principal each month, I think you'll start to be very enthusiastic about doing things a different way. The mortgage is almost front-loaded with interest. While it's still a simple interest loan, meaning you're really only paying interest on what you still owe, you're paying so much of that interest in the front half of the loan. In fact, for most people, it takes between 15 and even 20 years before you're paying equal parts principal to interest while paying that debt back. So the next main benefit of utilizing debt weapons the right way is we can take something like a 30-year loan and pay it off in 5 to 10 years instead. We show you how to do that in our other videos. Make sure you check them out. Third is that we create better bank accounts. Guys, I haven't met one person that was satisfied with the performance of their checking and savings accounts. They're just not designed to earn you a lot of money. You could have 0.001% in some cases being generated on money you deposit in those accounts. Banks are allowed to lend your money out multiple times over what you deposit. It's called fractional reserve lending. If you haven't learned something about that yet, make sure you check it out. You can go on YouTube and find excellent videos about fractional reserve lending there. But the point is that these systems are not built in favor of you and me as borrowers. They're not built in favor of you and me as banking customers. They're built in favor of the banks. Easy, obviously, for you to accept. Now, if you accept it, the question then becomes, what are you going to do about it? So we want to take these amortization schedules, we want to take even worse, compounded interest. Compound interest is applied to things like revolving credit, like credit card balances. And that's where you're paying interest today on yesterday's interest. It's been said many times over, I've heard this 1,000 times, that Albert Einstein supposedly says that it's the eighth wonder of the world. Who knows if he ever said that, but point being, it is an incredible mechanism for the banks to extract hard-earned money from us as their clients without us even realizing what we're paying for. So we have to make sure that we're eliminating the negative side effects of banking. And checking and savings accounts just simply underperform, folks. Checking and savings accounts are a liquid, safe, convenient way of storing our money as an alternative to digging a hole in the backyard or burying it in the mattress. But ultimately, we have to find a way to allow our money to go to work for us instead of going to work for the bank, because these dollars, while sitting in checking and savings, are completely underemployed for you. Debt weapons will allow us the same liquidity, safety, and convenience that checking and savings accounts provide us, but our money goes to work virtually every day of the year because we're able to reduce the average daily balance throughout the month and pay substantially less interest to the bank. So in a way, we're becoming the bank by following this process. Fourth, it allows us, fifth, fourth, it allows us to invest more quickly and safely. Guys, there is no way to get freedom of choice and earn the opportunity to do what we want when we want. If you're working, it's only because you love it. It's not because you need the money. Unless we invest. We have to invest. You've got to put your money to work for you. You cannot achieve what you want by continuing to go to work every single day and transacting your time for money. It's impossible. So while you're earning this money, you've got to then take that money and get it out there hustling for you, just like you're out hustling. And investing is the way to do that. When we have access to hundreds of thousands of dollars more than we had access to by saving, we're then able to go out and invest far more quickly than we otherwise would be able to. And because we're always accessing a surplus of these capital accounts, these debt weapon accounts, it provides us additional safety in the event that something goes wrong. Life is full of surprises. Some are pleasant, some are not. And if something goes unexpectedly, we've got to make sure that we have a slush fund of reserves. As opposed to having your emergency funds sitting idly in a checking or a savings account, why not have that money available to you through these debt weapon vehicles? They're completely liquid in most cases. So debt weapons afford us the ability to invest more and more safely. We then are able to minimize our volumes of interest. So when we compress amortization schedules, when we pay off our non-mortgage related revolving accounts faster, when our debts are eliminated in a fraction of the time, we're saving huge sums of money. When I say huge sums, I don't think you realize that this can total as much as 80% of the interest costs that you're paying on your home loans and on your non-mortgage related debts. Now, if you don't think that's a lot of money, go back over the last 10 years and add together all the cost of interest that you've spent, and I'm sure you'll walk away nauseated. In fact, you don't even have to do that. Go back into your file cabinet, pull out your truth in lending statement that you signed at the closing table when you bought your home, and see just how much your property is going to end up costing you over the next 30 years as a result of that mortgage. The bank is bamboozling you into being proud of your interest rate while insidiously confusing you about how much total cost of interest you're spending. And that's what debt weapons can help prevent. If you could get back 80% of the total interest costs that you will pay from today forward, you have a lot more opportunity. You can either invest that money or you can build another and improved lifestyle. And guys, listen, it's just about having access to more money. You can do with it whatever you want. Finally, it enhances your FICO credit scores and profiles faster. When you use debt weapons the right way, not only are we building our personal profiles and scores in a fraction of the time, but we're also building our business credit far more quickly as well. So it's very important that we do not neglect the benefits of these debt weapons. By doing so, every one of these factors I just went through isn't working for you. It's a liability pulling you down. So let's try and optimize in these areas, spend the small amounts of time necessary to do so, and then give yourself the freedom at that point to spend less time on your money than what you're spending today. By operating in an organized plan, this should actually take you less time than managing your money the traditional way. Thanks for tuning in.
Alrighty, so I realize that some of you have not gotten one of the single most popular budgeting tools available, not to mention it's free, and that is called the Cash Flow Cruncher. So what I want to do today is walk you through the process of downloading your very own copy. It comes in the form of an Excel spreadsheet, so it's very easy to use, and it's quick to navigate. So let's go ahead and walk through that process together. Go to cashflowcruncher.com, which will take you to the download page. Simply type your email address into the field to claim your free copy, and go ahead and select the red button. Immediately it'll pull up the download button, which will open a new Cash Flow Cruncher spreadsheet. The first page it'll open is the Cash Flow Summary tab, which is a non-editable page. It's very important to understand that this opening tab will not require you to put any information into these fields. This actually imports the data from the other tabs below. Now, if you've ever used an Excel spreadsheet, you'll navigate the spreadsheet by going to individual pages down here.